Welcome back to Fast Money. Earnings alert on two fintechs. Affirm shares dropping about 18% after reporting a bigger than expected loss, also lowering the outlook for the current quarter and announcing job cuts affecting 19% of its workforce. Robinhood, meantime, on the move, higher by 4.5% despite reporting a top line miss. Kate Rooney joined us with more from both the reports. Kate.
Hey, Melissa. So let's start with Affirm here, cutting its full year outlook and laying off about a fifth of its workforce. It's now expecting this year's revenue to be between $1.48 billion and $1.55 billion. That's down from the prior forecast. And guidance also lowering gross merchandise volume guidance. It did miss its own prior guidance for that metric as well, known as GMV. When it comes to those layoffs, you mentioned CEO Max Levchin saying and calling this a time of economic turbulence. He says Affirm will adapt by refocusing the core businesses and really only focusing on those high conviction things. He did say that they're closing down things like Affirm crypto, for example, not seeing a meaningful jump in delinquencies, which had been a big fear for analysts. Affirm says those improved sequentially and were in line with pre-pandemic levels. It has been an extremely volatile stock this year and a highly shorted name. Over to Robinhood, guys. So a miss on the top and bottom line. EPS and that loss was in part a result of what they called a processing error. So it was a mistake by the company on a reverse stock split on the trading app. That resulted in a loss of $57 million for Robinhood in the quarter. CEO Vlad Tenev just saying on the call that this was really disappointing, as he put it, and as a result, they made the decision to eliminate executive team's cash bonuses for last year. The CFO told me earlier that they're also able to hedge some of the slowdown on the revenue and trading volume thanks to higher interest rates. So that's giving them a bit of a boost. Net interest revenue was a bright spot, up 30%. But monthly active users were down. Crypto and equities revenue also dropped 24% and 32%, respectively. We mentioned those cash bonuses. The founders are also taking a pretty big pay cut, or at least foregoing a big payday. They're canceling about $500 million in stock-based compensation. So that should help cut operating expenses by up to $50 million per quarter, starting in Q2, and also reduce the diluted share count. We also had some FTX-related news. The DOJ had seized $55 million of Robinhood shares that Sam Bankman-Fried bought back in May. The Robinhood board approved a plan to buy back those shares, and they say they're working with the DOJ on how to do that. Back to you.
The error on the reverse, on the stock split, Kate, is just mind-boggling to me, because you think that it's all computerized and, you know, it's done. It's not like some guy in the back, like, coding and he made an error and they're... How does that even happen?
That's a big question. Unforced error for sure. And they really started the call off and saying, you know, we've done a post-mortem. We're making sure this never happens again. But the idea was that they had this reverse stock split on a stock back in the fall or around November, and said that they pretty much messed up, and it resulted in an accounting error. They said they figured it out pretty quickly, but ended up giving them a huge financial hit that resulted in that EPS loss, and as a result decided no cash bonuses for executives and talked about accountability in that. But definitely shooting on their own goal there and an unforced error.
Yeah. Kate, thank you. Kate Rooney.
Can you imagine if it was Google's AI that was in charge of doing it?
Okay, I'm a little confused on the stock-based compensation helping the cash flow. That's just removing it doesn't give you cash. Doesn't give you cash.
Right.
So I'm a little confused. Was there a cash bonus that they're foregoing? Because it looked like it said stock-based compensation of $500 million. If you can imagine after a flood like that. Okay, yeah, that's a big hit. Yeah, I mean, I don't even get how that. I don't understand. Especially for a company that almost made their business on the stock split kind of frenzy.
Right. Exactly.
I mean, I don't get that at all. But
yeah.
the FTX thing is interesting. Mm-hmm. If they can buy that stock back. That is interesting. I'm not sure how they'll do it, but
if you also look at the price action coming off of that print, the print was not spectacular, yet the stock is up after the print. So it means sellers exhaustion, over-shorted. People were just getting too tired of seeing it at the same level, and there's bears throwing in the towel. It doesn't necessarily mean it's a bullish story.
No.
It just reached a critical mass.
I mean, the shrink on monthly active users, 11.4 million in Q4 from 17.3 the year before, Guy. That's a massive shrink year on year.
Yeah, and you don't want shrinkage, Mel, as you know, and it's everything's trending the wrong way. And yeah, maybe it's just never good. And to Steve's point, maybe people are just getting tired of seeing it at one price, and it's a short covering rally. This is a trading stock. I don't think this is an investable stock. I'll tell you about Affirm if you want to go down that route real quick, because this is a stock that's probably rallied 160% from the 52-week low we saw a month and a half, 2 months or so ago. I think it got up to 21 and change. But to me, if you just really want to get it down to brass tacks, it's all about take rate, right? How are they doing? And it's not good. Take rate in terms of total revenue was 7.1%. A year ago was 8.1%. That's not good. And then this is even more important, I think. Revenue, so the take rate, revenue less transaction costs, 2.5%. A year ago was 4.1%. It's trending the wrong way, on top of which there are credit concerns out there. So it's just not a good business. Danny Moses has come on the show and talked exactly about this. So look, the stock is down significantly. It should be. I don't know if it gets back to $8.50, which is where it troughed at, but it's going lower from here, I think, for sure.
All right. There's a lot more Fast Money to come. Here's what's coming up next.